Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, this is Mike Miner. I've got Pat here with us today. How's it going?
Good, Mike. How are you this afternoon?
We're doing really good. We're going to talk about the hog market today. Hog market closed here this afternoon, Pat, Wednesday today. Cattle were down a little bit, but the hog market, pretty boring day for the most part, pretty much unchanged across the board here. That put June at 104 and December at about 82.5 here. So what's your take to start off with some of the recent market activity we've seen?
Yeah, on the nearby contract, that April contract that has 14 more days until expiration, down about 15 cents and settled a little bit softer here week over week. And, you know, Mike, we're, today's quiet trade, to your point, is perhaps a good precursor to our theme today, which is, this hog market is behaving very normal for this time of year. And a month or so ago, this market showed a little bit of life. April was trading at a premium to the index, at a premium to spot fundamentals. And the deferred slots were, trading a fairly normal curve beyond that. And so had a little bit of optimism in the market. We've lost that over the last 4 weeks or so as we've largely traded a flat cutout. And again, I would just come back to that's kind of normal for this time of year. It's not uncommon for us to try to put a little bit of life into this market in the first couple months of the year. And then in some years, we're able to build off of that and work ourselves a little higher. But most years we tend to stagnate as we work through this March, April timeframe. And so, we got a fairly nice basis structure today, which is a nice opportunity for our hedgers and up front here. And we've also now seen just a little bit of weakness in the pork carcass composite, hams specifically. A little bit lighter trade going into Mexico, I think, is putting a little bit of pressure on the ham complex today. But we certainly don't see anything, Mike, that seems to be incredibly alarming there, right? And so I guess, again, sort of just back to this theme of the hog market, while at historically elevated levels, which obviously is a good thing, it's behaving pretty normally.
Gotcha. Interesting. And you would say normally based on the market activity too, but yeah, USMCA relations, Mexico-wise, and then just go into like the domestic side, pretty normal on both fronts, you think?
Yeah, that's right. That's the right question, right? Like because I mentioned Mexico and softer hams, and that is where one should leap to, right? Is all right, are we sure there isn't something else going on there? Is there some concerns as it relates to USMCA negotiations and or anti-trade dumping? And I think the answer to all of that is no. I think this is just more, again, just from a seasonal pause here as it relates. Now, one of the things another thing that we wanted to talk just a little bit about that has started to catch outside market attention. We've seen and been watching Chinese pork prices for a while here, continuing to erode, and relatively expensive corn delivered into China has created a challenging systemic margin structure for the Chinese pork producer. And as you mentioned a couple days ago, Mike, this is starting to get the news. Goldman Sachs, Bloomberg, others are starting to talk about that a little bit too. And so, probably we need to be a little bit careful about that. I every once in a while, it's one thing for us to be dialed in and have what we believe to be a good solid understanding and of what's going on fundamentally in this market. But every once in a while, you could potentially get yourself into a little bit of trouble because money flow is thinking differently. And so that's a risk. That's a risk at some point that a pretty quiet length that's been built in the from the fund's perspective there might be some reasons here for them to be a little less interested, not the least of which is some concerns about China, and then also what might happen to Mexico.
How much do they care about China prices being at 15-year lows, and now they're losing a lot of money as of real recent after some of the conflict activity with inputs going where they are? Like, how big of a deal is China's hog market to our fund money flow buying U.S. hog futures, you think?
It's we have not exported muscle cuts into China for a while now. So fundamentally, internal fundamentals, other than the obvious advantage of variety meats, cuts that are less popular here in the U.S. That is a very
The
good
stuff
market.
I probably don't give my kids at night.
That's right. That is a very, very lucrative, nice outlet. Lucrative is too strong a word. It's a nice outlet for that product, from the U.S. And so we sure hate to lose that market for sure. But it's not a significant game changer as it works as it relates to I don't know, World Protein S&D or something like that. But again, if outside money wants to sort of focus on something like this, it potentially could be a little bit of an issue as we go forward here. Beyond that, Mike, I think we're in a situation today where the forward curve, the margin opportunity, and the deferred slots isn't quite as good as what it had been. I think that just generally we've done a nice job of taking advantage of those opportunities when they present themselves, and so maybe in just a little bit of a pause here and just trying to buy some time as we get closer to spring and summer.
What are some other talking points that you're working on in this hog market right now that you're getting questions on, people are wondering about, and what you think are kind of navigating through it to the important stuff, Pat?
Well, and Kate, I didn't ask you to on this before we started, and I should have. If you have access to Hog and Pig Report estimates, it wouldn't be a terrible idea to try to post those now. And if not, would just say that we do have a Hog and Pig Report coming out tomorrow afternoon. The supply side discussions that we've had leading up to this Hog and Pig Report is wrapped around, we all know in the middle front of our minds that with the current margin structure that the pork industry has recently offered in previous stages of this cycle, we'd likely be experiencing some expansion as it relates to breeding stock in the U.S. And so we'll keep a watchful eye on that as it relates to this Hog and Pig Report that comes out tomorrow afternoon. We don't expect it in this stage of this cycle that we would expect to see much of that, but that's one thing that we'll keep an eye out for. The other talking point as it relates to the supply side is just what's been going on with health, PRRS, PED specifically, and there's really no doubt that the issues of PED this year is worse than what it's been, or maybe the second worst, versus the 2013, 2014 area. And so we'll see, but I have a tendency, through the years to not sort of get not to get too caught up in those supply side discussions, particularly as it relates to the issue of PRRS and so. But there's no doubt for the systems and for the farms that have been impacted this winter, it's been significant. And so again, we'll be seeing if there's anything that might show us any indications of that in Hog and Pig Report that comes out Thursday afternoon. And then just one more thing on the supply side, Mike, is I think 0.9% is the exact number. The first 2 months of this of this calendar year, pork production is up about 1%. That's weights considered, and so and recently about 2.5% over the last 30 days or so. So anyway, we've been putting plenty of pork on the market here, and cutouts average a little more than $1 better for the first couple months of this year versus the first couple months of last year, and so that's a good thing, right? We're able to kind of print ourselves just a little bit of a raise year over year in spite of a little higher production.
Interesting. So the demand side handling another % more production year over year, it's handling it quite well.
Yeah, and that's a whole nother discussion about record box beef levels and being able to elevate pork demand relative to a historically wide relationship between beef and pork values and a whole nother podcast on the potential of all of that, which happy to engage in. But a real nice tailwind as it relates to that for sure.
But a very normal little setback here before those H&P numbers coming tomorrow.
Yeah, exactly. We are settled back here just a little bit, and I would say that has more to do with evening of positions, as we go into that report tomorrow, and or a little bit of month end, quarter end stuff potentially coming up here, and buying our time till we get closer to spring and summer.
For sure. And there's been some other significant news coming out today, Pat, just along the lines of commodity futures here. On the input side, we've had some changes here. The big news today was that the U.S. is going to issue to expand sales of E15 gasoline to ease pump prices here. In just the last month, gas prices have moved up now for the average U.S. Regular gasoline price to $3.98, up almost more than $1 here from a month ago. So they're trying to do their best effort to try to ease some prices at the pump, help consumers out a little bit. And this is just one of the small steps I think you'll see over the next 10 days or so, it sounds, from this administration, whether it be trying to get a ceasefire lined up with Iran or trying to just ease some of the inflation concerns. You've got midterms coming up, which keep getting talked about as well. So you're starting to see this administration. Even saw something on Brooke Rollins trying to address fertilizer concern for those prices and availability too. So they're trying to navigate a little bit more carefully around some of these inputs, I think, that impact a lot of people across, especially the Midwest, heading into midterms here.
Absolutely. And we talked, we tried to lay the foundation of this discussion in our Hog podcast last week and our last couple grain podcasts as well. And so I do think it's important that, all of us as all of our end users need to be keenly aware of the developing changes in the feed grain and oilseed complex here, not the least of which is biofuel mandates here in the U.S.
And the next time we talk here, next Tuesday, we have a quarterly stocks report and prospective plannings. Just the next 3 to 10 days, really, even now to next 10 days, you're going to have a lot of new reports, a lot of headlines. This grain market specifically is going to get pushed and pulled a lot of different ways, Pat.
Yeah, and we're still trading weather out of South America, and we're going to start trading weather here in the U.S. And again, as you say, we've got a lot of question marks about acreage, and as soon as those numbers come out next Tuesday, they're going to be questioned because of the changes of market structure since that survey was taken, and all of those things. Again, just added levels of volatility. And again, as we mentioned last week, creates opportunity. And so appreciate the opportunity to engage and talk through what makes the most sense for your operation.
It's been and will be really interesting to watch. This war is almost a month on now, or conflict, I should say. It started February 28th. But the first 2 weeks, that was all we traded, I feel like, in a lot of commodities was that conflict. And now recently, it's having to choose, am I trading conflict today or fundamentals, EPA news? And it's having a lot more versatility and flexibility, I think, with headlines here as of recently. So it'll be interesting to watch the next week. But thank you, everyone, for tuning in today. Remember to click the link in the description to sign up for our daily market commentary, get fast insights into the ag markets and more. Also, check out our website at professionalagmarketing.com.
Thank you, Mike.